Hi, this is James Strug with Westpac London's end of day report for Thursday, the 16th of February. Well, the best way to summarise today is that Europe continued to weigh on markets, but the US economic data was generally positive. By Europe, I mean the news that Moodys has on review a whole range of global banks, including a bunch of European banks for credit downgrades. That certainly weighed heavily on the banking sector stocks, and actually that came through the same day as the Spanish, following on from the French earlier this week. The same day the Spanish lifted their ban on the short selling of financial stocks. So we saw financial stocks in Europe weighed down quite heavily. Ongoing concerns about the Greek bailout. Will it happen, won't it happen? The latest news being that we won't get a decision now from EU finance ministers until February the 20th, that's Monday, at the earliest. So the protracted Greek bailout negotiations are another negative for markets, and those two factors, Moodys and Greece, saw the European markets open quite sharply lower. However, as I noted, the US economic data today was pretty positive. We saw the Philadelphia Fed index, factory index, rise from 7 to 10 in February, its highest since October. Housing starts rose 1.5% in January, but the big news was a huge revision to the December figures to the upside, so that there's a really steep sort of upswing now taking place, particularly in the starts of single-family dwellings. Further evidence that the US housing market has not only bottomed out, but actually may be starting to make a very modest contribution from a very low base to the US economic growth story. The other positive was initial jobless claims, the weekly measure of the extent to which people are being laid off. It fell to a new 4-year low, down 13,000 to 348,000 in the latest week. Other bits and pieces of data too, including a slightly higher producer price index for the US, but they're the main positive news items today. And following on from the Fed's minutes yesterday, which suggested there's still some chance of a further round of quantitative easing, notwithstanding the latest run of better data, that all added up to fairly positive sentiment in US markets, at least as I speak, about an hour into US trading, doing this report a little bit earlier than usual. So given all that, at about an hour before the European close, we've got the London market down 0.25%, the French market down 0.25%, and the German market down 0.33%. The Spaniards are down 2.6%. Their banking sector stocks hit particularly hard today, as I noted earlier, and Italian stocks are down 1.25%. Those losses were steeper across the European markets earlier today, but the US numbers have helped mitigate those losses to some extent. The Dow's currently up 0.5% at 12,848. In the commodity markets, the negative story, the negative movements there for copper prices, down 1.4%. Gold's down 0.5% at $1,718 an ounce, and oil's down 0.1% at $101.69 a barrel. In the currency markets, we've got the Aussie dollar at 1.073 against the US dollar and 82.3 euro cents. Both the Aussie's higher against both those currencies, particularly against the euro, where it's knocking on its all-time high. So that's about it for today. Just a note, as you will have seen probably, given the steadier jobs numbers that we've been getting in Australia in trend terms of late, and the lower unemployment rate in the latest report, and given the Reserve Bank's comment in the monetary policy statement last week that you need to see a material weakening in the domestic economy to see interest rates eased again, we've pushed our rate cut that we were expecting in March back to May from the Reserve Bank of Australia. Still expecting another 2 25-point cuts, but delayed the timing of those a bit. All right, that's it from me for now. I'll be back again tomorrow.